With a look at stocks ahead of the trade talks, the major averages coming off their third straight down week, a bit volatile today, all in the green as we speak now. Weiss, I thought it was interesting. Your note today said you were a net seller on Friday, and you're going to sell in any strength that you get in the market. Why is that?
Yeah,
you just don't believe we're going to get anything substantive this week from trade?
Well, I'm not selling any more into it. I took advantage of the lift on Friday to sell some stuff because I'd have way too much bait in my portfolio. So there haven't been a lot of selling, but just some shaving here and there. Look, I think what the news that came out today and over the weekend has set the bar a little lower for what could come out of the China talks. As long as they make some sort of progress, I think we're okay and the market lifts. My bigger concern is really the earnings season. So we're trading 16 times next year's number right now. That's not cheap. The market generally is about 14 times. So if we see continued strength in the market, and it has to be measurable strength, yes, I will continue to take down positions. And what I'll be left with are Boeing, which I still like, MasterCard, Visa. I took a little MasterCard off because I had way too much exposure there. Microsoft not selling. Target I love. So UAL, I still think that bounces up to 90. I actually added to that last week. So, so I'm not going to be out of the market, right. Just lowering my exposure.
The problem, Joe, is, I thought Carl Quintanilla made a good point from earlier. There's nothing really in the market to please either side, the bulls or the bears. That's why we're sort of stuck where we are. Belsky, a little while ago was on one of the shows, too, saying it's just an impossible market to predict. 5% upside on a potential tweet, 5% downside on a potential tweet. Yeah, you just don't know what to do.
Very confused market. I think we highlighted that on Friday. But underneath the surface, I think there's something that has happened since October 1st that's maybe giving a little bit of a lift to the S&P 500, and that is the value of the dollar. That seems to have topped out on October 1st. You're seeing a lift in the euro currency. So quiet, not really being discussed very much. But if you can get a little bit of a retreat in the U.S. dollar, that's going to lend itself favorably to equities. But I agree with your overall assessment. This is a very clouded environment that we are in right now. I will say I'm pretty surprised to see the S&P 500 sitting at 2950, given that lack of visibility, and that generally points to a continuation higher.
So, Shannon, maybe you had a couple days to end the week, in anticipation of maybe getting some good news, trying to get ahead of that. What are you doing? Weiss is a net seller, clouded picture from this side of the desk. We go right in the middle. What do you think?
I think, Joe brings up a great point. If you look at what's happening in international developed and emerging markets, there actually seems to be a little bit of strength here. Almost some positive optionality in those markets right now. We've got, potential deal in Brexit. I think we're still buyers of equities here. There's no catalyst to move en masse into bonds or cash right now where interest rates are. And so for us, we're trying to look at our equity exposure and say, are there still areas of undervaluation? And is there a potential catalyst? And I think that we're seeing that in some of the economic data as well out of Europe.
Yeah, Josh, what do you make of all of it?
The consensus for S&P 500 earnings for the third quarter right now is about $40 and change, and that is down from $44 where we started the year. The S&P 500 is precisely flat with where it was 1 year ago. So if Q3 earnings are down 1% or so from the same Q3 a year earlier, if that's the worst that we see out of this decline that we have in earnings right now, I think there's room for the market to bounce because the market hasn't done anything. It's not like we've front-run this softer earnings period. We're right where we started off. So I think when you think about things that way and yields being materially lower, bonds being materially lower, mortgage costs going down substantially, there's room to the upside.
So even if you have negative earnings growth,
well, I think you're going to.
You still could get moved to the upside.
Yeah, because I'm not the only person that knows this. And so you have to look at...
that's why I asked Bank of America. I was going to get there anyway. Bank of America with its note talking about the same thing.
So let me finish my thought, though. So I agree with all of the things being said about uncertainty, the Belsky stuff, what Joe is saying. I totally agree. So when in doubt, focus on price. Let's look at what's going on. Uber, Work, Lyft. These things were anchors on the NASDAQ bull market trend. Now they're lifting. Apple is at a 52-week high right now. It's 2% away from the all-time highs it set last summer. Biotech bouncing from oversold conditions. The IBB still looks incredible. That's a consumer read. NVIDIA up 3% today. Massive upgrade this morning. Keep in mind, NVIDIA fell in the fourth quarter of last year in just 3 months, 56%. That bottoming process took a long time, but that now looks complete. NVIDIA looks excellent. These are important stocks, sentiment-wise. These are the names that people key off of to decide what they want to do, buying and selling other names.
So good points. Can they withstand those names and those moves, no moves from the trade talks this week? If I tell you that we're going to get nothing done this week of substance, what happens to all those stocks that you just said are key bellwethers for where the market's going?
I would imagine if there's a market downturn because people get disappointed, they could go lower. But we're talking about a relative game. Which stocks do you want to own? These are now going from being some of the worst stocks to looking like some of the best stocks. And look, it doesn't mean that'll continue, and not every name will continue higher. But I think when you see Netflix putting in a bottom, now look, even the retailers, Macy's, Nordstrom's, Kohl's, Gap, these stocks are bouncing hard. I don't want them, but somebody does. And the names that I'm describing were, in my opinion, the names that were introducing a lot of negative sentiment into the market, and now they're bouncing hard. So, again, I agree with all of the comments about uncertainty. When in doubt, focus on price, not commentary. What are people literally doing with dollars? What they're doing is going back into these stocks.
And I think last week, Judge, when we were in the midst of that 3-day harsh sell-off, Josh called it then, and it was exactly right. We were overdue. We were oversold. And we were down 335 points. We flip around. We go up 150 that day. And then we rally big time on Friday. I think right now you're seeing a lot of money flowing back in on the NASDAQ names, tech names in particular, whether it's CrowdStrike, whether it's NVIDIA. That's why the NASDAQ is trading 700 million shares at mid-session today versus the NYSE at 200 million shares. NYSE shares, it's almost like there's a buyer or seller strike. Nobody's really trading that. 200 million shares is the kind of number those guys put up in an hour, hour and a half.
No, I hear you.
It's but the NASDAQ.
The other day when I was down there, too, the volume was pathetic.
Yeah. And I think
a full day was like 500,000 shares.
Yeah, I thought 500 million.
500 million.
Yep. I think what these guys are, you always say that Pete and I love volatility, and for the most part, that's correct. I like trading volatility, and volatility is bleeding out right now across the board, in particular in those stocks on the NYSE, Scott. But as far as to Josh's point with Apple, for instance, we'll talk about it later, but I got a lot on Apple. Netflix, we had the same firm with that unusual alternative data that we've talked about that said last quarter, hey, Netflix not looking so good. International subs, people are cutting on their apps. They're not spending as much time on the app. This is from a scraping firm that takes exactly how much people do on their apps as well as web traffic. Today, Netflix is up $8 over the lows of just Thursday last week. And Friday, when this data broke, the stock jumped $6 in about, maybe it was 16 minutes. I mean, just went from 168 to 175 like that. So those are the kind of moves you're catching because we've got a lot of folks sitting on short positions or a lot of folks looking for the next move to the upside.
I just want to give a little more substance to what I said. So my view is I don't look at it as a positive that the market's where it was a year ago, despite earnings declining. I looked at it as a negative that the market multiples expanded in declining growth economy. I don't see the good news in Europe. I see German numbers again today. We're down 6.7%. You have new orders down 0.6%. Both disappointing, and the bazooka that Europe has fired in the past has done nothing.
Right, I don't think people are satisfied in the fact that the market has done nothing in whatever 18 months or whatever.
But apparently that's what I'm hearing. That's a good sign, despite the fact S&P earnings have come down 10% from $45 to $40. That's a good thing because the market's where it is because it's done nothing. I'm just maybe paraphrasing what Josh said. My view, the market's had an expanded multiple.
Do you agree that if the actual Q3 number is not 40 but 42, the markets will rally on that?
Of course.
Okay, because that's been happening for 10 years now.